The Oscar nominations are out. We weren't nominated, but, you know, Wolf of Wall Street, we'll take that. Investor Beat starts now. Thanks for watching. I'm Chris Hill. It was red across the board on Wall Street today. The Dow index being pulled down in part by Goldman Sachs and JP Morgan Chase. Joining me in studio today, Morgan Housel, Tim Hanson. Gentlemen, our top story. Best Buy was one of the best performing stocks of 2013, but shares fell off a cliff today after the retailer said sales fell at the end of the year. CEO Hubert Joly called the holiday season, quote, intensely promotional. Which is code for what? We had to slash prices beyond all recognition?
Yeah, I mean, so yeah, we operate in the same segment as Walmart and Amazon.com, which is a tough segment. Best Buy did a lot of what they called investing in prices, which is a euphemism for we can't charge what we need to have sales go up. And they put up a negative comp, which means they had less sales this quarter, like for like, than they did this time last year. In retail, that's a bad thing, generally speaking, but it's even worse for Best Buy this year because last year's comp was zero. So they were coming over a weak comp and they put up an even worse comp, which is why you're seeing investors get off the flaming bandwagon.
And keep in mind, the quarter we're talking about is the holiday quarter. If ever a retailer needs to step up and perform for investors, it's the holiday quarter.
This is the time to do it. And you know, one other thing that's going on here, we were talking about this morning, shares are up 200% in 2013. Even with the giant crash this morning, shares have basically doubled in the past year. So there's a lot of that was probably short covering in the last year. Investors who are short, they have to buy back shares, pushes the shares up. So I think there's some question whether shares were priced for reality prior to this morning's crash. So a lot of this is just retracing that. This is what happens when you have a huge run up in the stock and a poor business combined. Not pretty.
What do you say to someone who looks at this and says, hey, look, they had a good run last year. This is a time to get in at a cheaper price?
You're an idiot. Can I say that? No, it just doesn't make any sense. I mean, Best Buy is in a very hard spot. And you know, when you're competing, Walmart has the scale and the distribution and all these things where they can earn thin margins and do okay. Amazon has shown time and time again that they are willing to do whatever it takes to force, you know, weaker competitors out of any category they want to enter. And Best Buy is stuck in the middle of that, and it's not pretty.
All right, let's get to some of the day's movers and shakers. SolarCity hitting a new all-time high after Deutsche Bank initiated coverage with a buy rating. Solar stocks typically kind of a volatile industry. Is this the best horse to bet on?
Well, yes, I think it is the best horse to bet on, but what does that mean? You can have a lot of sick horses. So shares are up, you know, they're a 10-bagger in the last 2 years. It's only January 15th, and these shares are still already up 35% year to date. So, I mean, there's a lot of good news already baked into this price. But this report from Deutsche Bank, they're pretty bullish. Their best case scenario shows shares doubling in the next 2 years. They think SolarCity's user base could double this year, and they see grid parity by 2016. So they're optimistic on the industry. It's just a question of whether that really fits into where shares are right now.
CSX Corp falling after fourth quarter profits fell 5% for the railroad company. I'll ask the same question I asked about Best Buy. Is this a chance to buy at a cheaper price?
Yeah, this one I actually think looks interesting. CSX actually put in really nice top-line results. Volumes were up, and pricing looked solid. And so, I mean, you see a little bit of a recovering U.S. economy in the numbers there. And they've got a nice, you know, network of rails on the East Coast where there's a lot of population. Their trouble was on the expense side, where expenses were a little higher than expected. But, you know, I think at the end of the day, if top-line volumes are good, you know, the operating leverage in that model will take care of itself.
Microsoft down a bit, but the big news is Bloomberg's report that Ericsson CEO Hans Vestberg is now on the short list to replace Steve Ballmer later this year. Is that the move for Microsoft to go external, or do you think the smart betting is actually on an internal?
I certainly think that going external would be better for shareholders. I think going internal, this is the same issue that General Motors dealt with years ago. You bring someone in that's internal, it's just keeping that long-term culture that has hurt the company for the past decade going. But really with this short list too, we have to remember that this is about the 19th iteration of the short list we've dealt with for the past 2 months, so take it with a grain of salt.
And finally, Nu Skin Enterprise is down huge after an article in People's Daily alleged the company was running a pyramid scheme. Trading of Nu Skin stock was halted 4 times today. One time, I could see 4 times?
Well, Nu Skin treated this, when this article came out, I think it was yesterday, Nu Skin treated it like it was any newspaper article. It says, oh, they don't quite have their facts straight. seemingly ignoring the fact that the People's Daily newspaper is run by the Communist Party of China, who also happens to run the government and the regulators. So it was no surprise today when the Chinese regulators said, oh, hey, we're investigating too. And I think Nu Skin, I'll say this, if I'm running a business in China, the last person I want to cross is the Chinese government. So good luck to Nu Skin.
All right, that's going to do it for today's action. Give me a stock I can put on my watch list.
MasterCard, it's been going gangbusters for 5 years. This is a huge company that's up 500% in the past 5 years. During the financial crisis, their debit card division was doing well. Credit cards were always a drag as people were paying off their debt. That's starting to end now. U.S. consumers are back to racking up more credit card debt in a safe manner. That's going to be good for MasterCard.
All right, Tim, what about you?
HDFC Bank reports tomorrow. This is India's probably the best-run consumer retail bank in India. There have been some worries in India around interest rates and consumer demand and loan portfolio quality. HDFC, though, is best in class, and if they show that they continue to be better than the peer group, the stock looks pretty intriguing.
All right, for Tim Hanson and Morgan Housel, I'm Chris Hill. Thanks for watching. We'll see you tomorrow.